All right, man. So we are live. Stephen, thanks for jumping in today. Why don't we kick the conversation off just to kind of set a foundation on your background? Prior to running Bittrex Global, you were working at another crypto exchange and had a more traditional experience in banking, in fintech at Goldman. What was kind of the foray for you? Like, how did you come across Bittrex in particular? What were they doing at the time
Sure.
that you were
So
that you found
actually,
compelling?
while I was still working so I was really interested in crypto. It just, I had a whole long career in what I would call traditional finance and banking, between banking and hedge funds. Um, and I was always sort of gravitating towards, even within banking, new industries. Like when credit derivatives came out, always looking for the cutting edge kind of growth areas. I would call myself an entrepreneur, like always doing sort of entrepreneurial things, but I was not quite willing to take the complete plunge and go out on my own. So, so I did that in banking, moved to the hedge fund side of the business, and those tend to be very, small companies. Even if they're big hedge funds, they don't have a lot of employees. So it's a lot more kind of entrepreneurial focused. And then when crypto, I definitely was not an early investor, but, in 2017, it was pretty hard to ignore it. And I really, once I sort of took the time to understand it, I sort of got that bug, and I was like, wow, I get this, and this is going to be game changing. And I really saw it as something, not just such a wealth generation thing or creation prospect, but I think blockchain is like, as I joke, the Amazon moment for financial services. So like the traditional banks are like Barnes and Noble in the 1990s, and they think by adding a coffee bar and a couch that's going to stop Amazon from like steamrolling over them, and it's not going to work. And like the banks don't even realize that they're Barnes and Noble right now. So in that analogy, so I left out, even now, like, roll back the clock 4 years ago, I'm like this, I went all in, and I just decided to quit my job in traditional banking, go all in crypto. While I was still in traditional banking, I met Bill Shahara, and then that's how I ended up at Bittrex. So I had met him, and then as I started doing more stuff in crypto, reached out, and I really thought, what I liked about Bittrex, it was one of the oldest exchanges. We're not the biggest, but it's very focused on security, and we haven't been hacked, and the founders are not like in their 20s or in their 40s, and they've all worked in real jobs like Amazon and Microsoft running security. And even though they're not financial services guys by background, they understood that regulation is not like optional. You don't get to just say, oh, I didn't know. And that, for me, coming from traditional financial services, I like cutting edge things, but certain things are non-negotiable. Like you don't get to not be compliant. The regulator doesn't care if you didn't know the rule. Like it just is what it is. So it was a real win-win, and that's how I ended up at Bittrex and Bittrex Global.
And so, do you emailed the founder and said, "Hey, I want to come work with you"? And at the time, were they small enough?
Actually,
Where
when I
that
was
was
frankly, and I was having lunch with him, and I was still at Goldman, and I was like, "Forget you becoming a client. I want to come work for you. Like this is great."
Yeah.
I actually did say that, and I was already at that point like I just knew I had to do something, and then I ended up briefly doing something else in crypto for a bit, and then I reached out to him, and I was like, "I'm already in crypto, but now I really want to come work for you. Like I get this now," and then that's how I ended up there. So it's not it's an interesting dialogue. So I've known him for quite some time, but it's like everything in crypto. Nothing takes a very linear path. I think everything's a bit kind of you go sideways, zig and zag, to kind of get to the right place.
Yeah, totally, as represented in all the token prices.
Yes, it was
General trends,
path,
but
up and down. It wasn't a straight line like that.
Yeah. So where is it today in terms of, I guess you think of transaction volume or number of employees working, or however you measure outward metrics?
How is Bittrex doing as a company?
Yeah, like give me a sense of the
Sure.
scale
I think,
of the project.
Look, I think we're not, again, we're still in like the top 10 of crypto exchanges, but I think the way I bucket the industry, there's sort of two buckets. There are those who operate and just have interesting views on how the regulatory, again, like they're selling 150x levered Bitcoin. And those exchanges shall remain nameless, but that's fine. You can do that, but that is considered a security. It's a derivative. So that is a security in most of the developed world. So you can say, well, they come to some island in some place that, where we operate and it's all reverse solicitation. At some point the regulators, and they already are onto this, like, no, that doesn't work. That's like if I sold stocks in Europe and said, oh, I'm operating out of the Seychelles or wherever I say I am, like, eventually they're going to come after you. And that just hasn't, they're investigating it. And, these things always develop very quickly. The regulators are always a few years behind, but guess what? They have 7 years to come after you. So it will happen. And so I think the problem is the ones who do that, and if you did that in banking, of course you could build a much bigger bank than JP Morgan, but it would be like a house of cards. So how can they compete? It's not a level playing field. So I think we don't compare ourselves to those players. I look at the regulated players, Coinbase, Kraken, Coinbase is a public company. We're not. We're still privately held. The 3 original founders, and there's no outside money in the company. So, Kraken, which is also a regulated competitor, they've taken VC money. So it's not apples to orange. But so I'd say if you want to look at relevant competitors for us, it's within the regulated or the ones who self-regulate and understand that that's just how you have to operate.
Yeah. Interesting. I like that comparison. It is an asterisk around companies who aren't taking the regulated path, or at least the consensus view on what regulation is trying to uphold, because it is like a house of cards, right? It's like it's hard to double down on a company like that.
Exactly. So what is it really worth? It's unclear. And again, you can say, and I'm sure you can know which person I'm saying, but you can say your company is located nowhere. We're decentralized. Well, okay. So where are you, in outer space? Where is your company? That's not how there's a square peg in a square hole. Planet Earth operates a certain way. Just because you've decided it's a new technology. Just because the trades settle on the blockchain, that doesn't mean they're not subject to the laws are on the books. It is a complicated business. If you look at an international bank like a Goldman or a JP Morgan, it took them 100 years. They have offices all over the world. They're regulated, they sell all these different products, and it goes by the client and the product. Which product are you selling? Which type of client? Is it retail or institutional? And what country are they in? And then it's a very complicated matrix to have. So, overnight with blockchain and the internet and fintech, you have created. Again, you look at the size of some of these companies and the wealth that's been created. It's faster than has ever been done. Even with the internet, the Facebook people. This is a totally new thing.
By 10 times
yes,
the order speed.
The key thing is but don't assume that they've actually followed this matrix and ticked the box. And if they did go at that speed and it wouldn't be physically possible. So I think the way I look at it, and if you look at, assuming you're in the unregulated world, there's 2 types of infractions. There's the really horrible one, and that's money laundering, right? So that's the worst one you can do. And that's if you don't do KYC or AML. So let's say that, and again, the exchanges shall remain nameless, but let's say you can go onto an exchange and just onboard. It should be like a bank. If you try to onboard with us, it's like the same things you'd have to do to onboard with the bank. ID, address, source of funds, this is standard stuff. And again, fintech banks do this already, so it's not like some new thing. It's just if you're doing fintech onboarding. But if you don't do any onboarding, you just have an email address, which there are exchanges who allow you to do that and move 2 Bitcoin a day with an email. Imagine you can have 100 emails or 1,000 emails, string them all together with a bot, and then that's 2 Bitcoin, and that's $120,000. In the U.S., if you do over a $10,000 transaction, red flags go up. Imagine if you're moving millions on a daily basis. That is just the global definition of money laundering. That's not anything new. It's been around Al Capone in the 30s. So if you do that, that's really bad. Then the U.S. will come after you, because even if you say your company's in outer space or wherever it is, or some island somewhere, if you have American citizens and onboarding onto your exchange, the U.S. regulator will say, you're doing business in the United States. We don't care where you are, if outer space. Then they have jurisdiction over you, and guess what? There's nowhere to hide. They will come and get you and extradite you and put you in federal prison.
Is that right? Is that how it goes down? So say you are on some remote island in the Caribbean, or anywhere, some remote island anywhere, and you're connected to the internet, and you build an exchange, and you allow you allow anyone in the world to use it. The government, U.S. government will send people, they'll fly them on a plane.
It depends where you are. So let's say the person running those things usually isn't living in these remote places. They're usually somewhere very developed, right? They just put the company there. And
right.
There's no substance or anything. But it doesn't, forget that. They can operate the company in Germany or in a real jurisdiction. If you have U.S. clients, you are operating in the U.S. I'm saying, it doesn't matter where the company is. It's where the client is in financial services. So I'm saying this is a very naive, tech person who's just starting up in blockchain doesn't understand, like, you're in an established world. There are rules. It does, like, so you think you've solved the problem and you haven't. Like, you're still subject. So that's what I'm saying. If you do money laundering, which just means you accept clients and you're moving money without doing KYC, especially if you have Americans who can access it through a VPN or whatever, then they have jurisdiction over you. It doesn't matter where you are, where your company is. So, like, let's just break this myth. So that's the worst thing you can do. You end up being a felon, and then you go to federal prison, and that's really bad, because even when you get out of federal prison, you're a felon forever. You can never work in financial services again. And there's countries on planet Earth, like the United Kingdom, where you cannot enter as a U.S. felon for the rest of your life. So, like, this is like the worst thing you can do. So that's really bad. And there's no buying your way out of that. That's a criminal offense. Then there's civil penalties. So things like selling securities. So you're selling your 150x Bitcoin derivative into like the U.S. or somewhere else. Well, that's bad, but there'll just be some fine. And I think that's so some of the exchanges in that unregulated bucket, the money laundering, I don't know how, like, anyone does that. And the ones that did it are now cleaning themselves up or pretending to, because they know that's, like, really bad. Like, prison's bad. And then, especially U.S. prison. And then, it's not like, a nice one. And then the civil penalties, I think the bet on the security stuff where they don't have proper licenses, I think the bet that they're taking, again, which we would not do this, I don't recommend it, but I think the bet they're taking is that, well, I made enough money, I can just pay off all these fines. And they're civil, they're not criminal. So, and again, I don't know how that's going to work out. It's such a new industry, but that's basically what's going on. And don't kid yourself. And again, as a user of these, you're not really liable, except if you trust your funds on a place like this that doesn't do KYC or is doing things that probably are not 100% above board. Would you put your money in a bank that did that? No. But with crypto, it's money. Like, you're putting your assets, if you store them on these places, like, just not all exchanges are created equal. Like, that's sort of by my luck.
Yeah, this is kind of like human nature, right? People see the appeal and they get greedy. They feel they tell the story in your mind. I mean, I'm sure I do this, where I'm saying, oh, they've got a nice about page. Like, the website looks great. This is reputable.
Would
the
you
great
put your
team
money in
picture.
a bank that had a pretty page and wasn't was in the Seychelles? No, you wouldn't.
Yeah.
You want a bank that has like FDIC, or if it's in Germany, it's like regulated by the bank BaFin, the bank regulator. So you would actually care. It's interesting, but
well, I feel part of it is generational too. Do you agree? Like, I think of my grandparents who lived through the Depression, and where banks were not issuing their money when they went and tried to withdraw. Exactly. Like that pain hasn't been experienced by certainly millennials. I mean, maybe you could argue a little bit.
So there's an assumption that things will be fine. But, like, where they take for granted, they are using things like Robinhood or Revolut, that very big online bank, but that's regulated as a bank. Maybe they don't realize that it's safe because it is an actual bank that is licensed and supervised by a bank. Bank licenses are very hard to get, especially in the EU or in the US. So they don't. Maybe they just assume that the crypto exchange is the same, and they're not. They're not regulated.
Clearly, you think about this quite a bit. What would you say if there's a line in the sand where you say, okay, on this side is the way of doing business that is above board, wherever that line is. Yeah. And I know that's multiple decisions across the business operations. On the other side is this is too sketchy. This is, potentially lands you in prison or at least civil fines. What percentage, if you had to guess, the number of exchanges or volume going through is on either side? Is it like half the market is doing it on a unsustainable exchange?
I'd say more than half the market is unsustainable. And also, you have to, do you trust these league tables? And, then these exchanges as well. I mean, again, this is like the SEC stuff, the 1920s, they discovered the problems with, like, an unregulated market. So, like, all of this stuff came out in the 30s, and the U.S. laws are, like, kind of been adopted in some form or another globally. So it's kind of just how business has been done for, like, 100 years. So this isn't like some new concept I'm talking about. But, things like wash trading or insider dealing, like, none of this stuff, and this all happens on some of these exchanges. So again, there's a lack of formal regulation, or it's unclear. I think there's just two different ways of doing business. Like, that that's not allowed because it's financial services. So you should just adopt the end state that is going to happen now. That's certainly how I operate and how we operate and always have. And again, I think some of our competitors, especially, Coinbase has to. They're a publicly traded company. So there's regulation on that level. Like, that would be like, they would get in trouble with the SEC or whoever's supervising the stock. So they have public disclosure to shareholders. So they're not going to do that. If you have VCs in there, they don't want to have any parts of something like that, like in the Kraken's case. So, I think, I don't know enough about these companies, but except I would just assume that they have too much skin in the game that they can't do things like that. But a lot of these exchanges, again, I won't name these competitors, but you can figure it out yourself. Like, I think it's interesting the risks they're taking, and some of them are spending tons on these sports sponsorships now. And I think maybe they believe that that's how, if we spend enough with and our name's out there, then maybe the regulator won't come after us. No, that's not how it works. Like, that's a flawed assumption. I think that's not going to work out as assumed.
I think coming from the tech background, I feel there is this mentality that's fake it till you make it, or move fast and break things. These slogans represent sort of ideologies or ways of a culture, really. So it's like move fast, grow as fast as you can, put the rules secondary, and then figure it out later. And I think part of the lag in the way the businesses operate is because of the growth. Like Uber was probably the fastest growing company in history when the time that they were rocketing forward, and they were breaking a lot of rules. A lot of the rules were vague.
But so there was a labor laws, or they were
totally.
The same thing in Amazon in like the 90s. They were breaking sales tax laws. Like, these were fine. It's bad, and like you're not going to go to prison for that. But breaking money laundering and securities fraud, I mean, these are like the worst things you can do, like white collar crime. Like, that's really bad. Like, that's not excusable. Like, and I think you're right. The hypothesis or the recency bias is, oh, it worked in the 90s or the 2000s, and that's how you grow. Facebook, yes, that's a flawed assumption. They're operating in financial services, the most regulated business on planet Earth, without any acknowledgement or understanding of what they're doing. So they don't even know what they're doing, right? And I think you're right. They think that they're just going to, it'll be fine, and we'll get some slap on the wrist, or I'll have so much money in the bank that it won't matter. And maybe that'll work out. I mean, look, we've had one example of BitMEX, and they're felons now. And, I think that's interesting. So,
and it doesn't take a lot of examples. That's one thing I realized. So prior to this year, I was running a marketplace where people could on-ramp into crypto using gift cards, using transfers to each other. And the company was acquired actually by a publicly traded company. But during that time, it was vague. I was nervous, checking the FinCEN website, trying to figure out what can we do, what can't we do with KYC and limits. And it's very much, in my experience, I was leading a lot of the compliance internally in the company, and it was make your own rule book, but here's some guidance with the AML and all the rules. And you have to just choose where do you want to be on the conservative to aggressive caliber. And it just comes down to risk tolerance internally for the founders in the beginning. Exactly. And so there's some advantage. I wonder what the end state looks like for these policies. Like, one thing I'm curious your thoughts on is how would we know collectively as sort of a crypto community, what would be the signs that we have too much regulation and that we should go the other direction? How would we know?
Well, I think, first of all, the pendulum, I think like usually there's no regulation, and the markets get ahead of the regulator, and then it goes the other extreme. The pendulum swings too far. We're not there yet. And then it will swing back to somewhere in the middle. So we're still in the market's way ahead of the regulators, and they're trying to play catch up. And, but at some point, so we're not over-regulated right now. I think the biggest problem we have, so let's talk about the U.S. versus the rest of the world. So in the U.S., you have a lack of clarity around regulation. So you have too many regulators competing to be the regulator. So you already have money services licenses. So Bittrex US, and I'm not involved in the U.S. arm of the company, but just at a high level, there's 46 separate states that operate, and you have to have a money servicing license in 46 states. And on top of that, you have the federal regulators, and it's unclear. The SEC, the OCC, the CFTC are all duking it out for who should be running crypto. At least in securities, the Securities and Exchange Commission. They decided that in the 1930s. It's done. You don't have to worry about that. It's clear. They might change the rules, but at least you know who the regulator is. You don't even know who the regulator is. So people are operating in the U.S., and so Bittrex has decided, we have a U.S.-only exchange, and it's doing a lot less than we do outside of the U.S. because we don't want that gray area. So a perfect example, Ripple. That's a utility token in Europe. that is clearly a utility token. It's black and white. In the US, it's not so black and white. They're being sued by the SEC, who says you're a security, and they're suing back. And but that's a perfect example. Like, how can you scale the crypto industry when a basic token like that is, it's not clear.
Yeah, what's your, I mean, in layman's terms, conceptually, between a utility token and a security, how would you explain it to somebody that's 10 years old?
You have equity in the company. You own shares in a company. I mean, a utility token, my analogy, I don't know if it's a good one, it's a frequent flyer mile. Like on the airline, like if I have American Advantage points, I don't own shares in American Airlines. I don't own that company, right? I have no equity stake. I have this thing that, imagine if you could trade the frequent flyer mile and it had went up and down in price. It has utility on the airline. It allows me to buy, it's like a stable coin, sort of, until they devalue them, but it's like a stable coin that I can exchange for, services on the airline, basically, right? Or I can buy stuff out of their catalog or whatever, or hotels, and that's a perfect example of what a utility token is. So, a utility token it's a publicly tradable frequent flyer mile. And this asset class never existed before. You couldn't publicly trade these types of things. And so it's unregulated. Or there's places where they've clearly said this is not a security. It doesn't fall under these regulations. It does have some other rules, like you still can't do money laundering if you enable people to trade these, but it's a lighter touch form of regulation. So the US, we just don't have the clarity around, you have to be very careful to not be, you think you're a utility token and you can get legal opinions, but you don't have the sort of black and white clarity because the regulatory environment's so unclear. And then things like lending, you're seeing people doing it. Well, so who's in charge? Now some people are getting sued because they're doing lending. And I don't want to talk about competitors and things, but that type of, it's not that they're doing anything untoward, they just don't know what the rules are. So you kind of, in the US, you do it and then you hope you don't get sued. Like, that's not a really facilitating environment for any type of growth business. And the US is lagging behind, this place called the EU, which is not exactly a small place. I mean, they have black and white rules around. We can get clean opinions. So just in terms of Bittrex Global, for our non-US business, right now, it's mostly in Liechtenstein. And Liechtenstein is an EEA member state. So that means it's not full EU, but they have EU passporting. So if you set up a bank in Liechtenstein, it's like you can sell into France, or it's just like having a bank in Germany. Like the EEA, there's 3 of these countries. They kind of control their borders. They're not full EU members, but they have basically, for business, they have the same rights as financial services companies. They passed a blockchain act. It's completely crypto friendly. So we have 1,000% certainty under the Liechtenstein law. And as the EU is starting to normalize things, there will be eventually EU passporting around crypto. We're already supervised under the blockchain act by the FMA, which is the Liechtenstein bank regulator. So there is supervision. So all of our customer onboarding has to be done to fully EU standards, like KYC, source of funds, only certain IDs are acceptable. So they're very strict. So that's kind of, just to give you an idea. And then but you can get a clean opinion, which we do for every token that we list. And I would say to you, on some of these unregulated exchanges that are nowhere, then how do you get a legal opinion? You don't know where the exchange is. So we get a Liechtenstein legal opinion on every single token that we list, and that's an EU passportable opinion. So you could do this. So it's very clear. It's EU law, not just a Liechtenstein legal matter. You know that it's not e-money, so that means it's not money. So that's a European concept of digitally transferable money. So it's not e-money. It's not a security, right? So we know it's definitely a utility token, and so you can get legal clarity around this up front before you even create your token. Which you can't.
And the EU specifically designates between money and a utility token.
Well, they have a concept called e-money. So you don't want to have your token be considered e-money, because if it is, you need to have a license to sell those. You have to have an e-money license or a banking license. So you don't want it to be considered an asset that you need to be JP Morgan to trade, right? So then but then you can get clarity that it's not a thing that a bank has to be touching. And you can also get clarity that it's not a security. So you can avoid the Ripple problem that you think you've issued a utility token and then you're sued by it's not a security because it meets certain criteria. Right. The EU has set out some very clear guidelines. So that's where it's beneficial. They have a very centralized, the EU all that stuff is done in Brussels. Whereas in the US, we have 3 different regulators. In the EU, they have 1, right, for the whole EU.
Yeah.
And then on top of that, they've all taken federal control over all that stuff, not at the state level. So you actually, it's very centralized. So in some ways that can be very bureaucratic and horrible. In this case, it's great because you can get very black and white clarity on rules, and it applies to the whole block. So
Yeah, it seems
you have in the U.S.
Yeah, the money service businesses in particular they've always seemed to me like such an enormous burden to put on both the states and the entrepreneurs who are trying to run businesses in the U.S. It's like, I get it conceptually. I mean, I am a believer that there should be more power in the states overseeing people's lives than the federal government, generally speaking. But when it comes to money, we all use the same, there's really, at this point, there's no difference whether you're in Florida or Alaska if you want to send money to people. So to me, it feels like a utility or a concept that is just completely.
These are above my pay grade. That's let the banks fight that battle. I mean, they're now. I mean,
that's true.
I'm not
That's true.
On that, but yes, by definition, just the way it's structurally set up, nothing to do with the crypto business. This is financial services in the U.S. are very complicated, and when it comes to crypto, they're not even sure that they're going to apply the already very convoluted rules the way they are. They're all duking it out for who should own blockchain or crypto. So until they duke it all out, it'll still be a nightmare, but at least you'll have clarity. Like the thing with regulations, they're always horrible and just something you have to comply with. I mean, it is what it is. But you want clear regulations. The worst situation you can have is like you have in the U.S. now, where it's unclear and it's developing because you know as an entrepreneur you will do business, but there's a risk you have to price in. Like, okay, there's someone like I have risk that they could sue me and say I think it's okay. I have some legal opinions, but I don't actually know until you do it.
Yeah,
and that's
and
how
I think.
we're doing it.
I think you're right. I think founders tend to be higher risk where, there'll be founders who will build stuff. But the difficult part is you want to go and raise money from investors and they have to go to their LPs and explain it. And that's where I feel innovation is stifled because you can't raise from reputable.
You can't take that. Hi, we're not sure if it's legal. Like, okay.
Yeah.
You know, like all those gaming businesses. I don't know if you like in the early 2000s and they were running offshore, but they had U.S. clients and eventually they IPO'd, and then of course they got hammered and said, well, you can't compete and do that, and like it only works until it doesn't, right?
Yeah.
And the companies became worthless because the regulator came out and said it's illegal what you're doing here. Right? You can't just have a gambling website and have clients in one country and run it from Gibraltar, wherever the gaming company was set up, and that didn't work out too well for them. And I think that's crypto is the same thing. It just they haven't come down and like hit the hammer super hard yet.
Do you think about and do you see other leaders of crypto companies educating or communicating consistently with regulators? Because I'm sure that they do communicate with companies. They have to understand what they're actually doing behind the scenes and understand their thoughts. I mean, if they're creating regulations in a closed room, we're all in trouble because they do really matter. I mean, the rules of the game matter for how well we can all play.
Absolutely. So I think again, I'm an American, and Bittrex operates in the U.S. and we do it in a very compliant way. I'm just sort of stating the obvious. Like the construct of it is just not conducive for anybody, and they know that, and they're trying to fix it. And like anything, eventually they'll fix it. And the U.S. is such a big and important market, you will operate there, and eventually they'll catch up. I just think, unfortunately, it's not going to be the most innovative place for blockchain, and that saddens me as an American. China's obviously now decided there's no crypto; like everyone has to leave.
Yeah,
so
that's crazy.
They had the lead, and now that's like done. I mean, they have to leave there. I mean, we know so many projects that are like they have to. I mean, it's illegal. You'll go to prison like if they catch you, and like that's pretty risky. So it's interesting that I think of the developed places. I personally just think, this is my opinion, the EU is for a developed financial services market, and I'm not speaking not the UK. They have their own separate thing. I mean, you're talking EU. Remember, UK is not EU anymore. So, which is interesting. And we didn't put our business there. That's why we chose. So Liechtenstein. So we looked at where to put our non-US business, and we met with many jurisdictions. Some of which our competitors are in, and we're talking outside of the U.S. And so that's why we really like Liechtenstein. They passed a blockchain act. It's it's EU affiliate member. And it's a AAA rated country that uses Swiss francs as its currency. It is a completely legitimate banking and finance center already that has very high regulations and a very high standard. So we chose it because it's super crypto friendly, they passed a blockchain act. It's law. So you have Liechtenstein law. It is 1,000% clarity of what you're doing there.
Yeah.
Right? And we know that once Europe is talking about something called MiCA, markets and crypto assets, that'll be EU-wide legislation, which means that you can formally passport, you'll need to be regulated and supervised by a European bank regulator to do crypto business in the EU. So we're already set up for when the regulations are going to get more tight. So we're already doing it the right way. So we know that we're fine. Not everyone is, by the way.
Yeah, oh, I'm sure. Do you think that there's I'm trying to just have a story that I can at least believe with China and to a lesser degree the U.S. I mean, the U.S. it could be incompetence, probably mostly, as opposed to a real intention to not have clear laws. But China outlawing, do you think they're sitting there saying this threatens our centralized power? And I'm not.
I think it's very politically motivated.
Yeah.
I mean, yes, you have don't forget they have exchange controls on their currency. So forget politics, and I don't ever opine or get involved in politics anywhere globally. I think, but if you look at China has exchange controls on the yuan. It's not a free floating currency. So Bitcoin is a way in general, or just crypto in general. It's out of their control. And a lot of the population. So if you're a Chinese national and you have crypto, well, where is that? It's not in a Chinese bank. It's in the ether. It's DeFi. I mean, it's just not anywhere. It's not under their control. So I think that's something where they don't control that. So I think that's problematic. It's getting too big for them, I assume. And there's also rumors of them wanting to have their own digital yuan or digital currency, which then they can control. So I guess the view, again, it's interesting, and it'll be interesting to see how they can enforce this, because I think that's going to be very difficult. As people saw with the internet, you couldn't control information anymore. So I think they'll try, but I think that's probably what's motivating it. It's a control issue. I mean, look, poor El Salvador. They've adopted Bitcoin. You have the IMF, the World Bank, the entire world order is coming after this country that they basically starved to death with their horrible policies, and they don't like it because when El Salvador did that. Don't forget, they have a lot of bonds and covenants and financing already from the World Bank. If you read the fine print, if one of the countries adopts, they have to accept all, de facto, they're forcing the hand of the World Bank because that's making Bitcoin legal tender for them too. And they don't
wow.
So, I mean, you see why there's the pressure, but then you see other countries, it's like the pebbles in the dam, how they're going to stop it. So they can't. This is really interesting to see, who knows if you're doing a business school case study, how does crypto work out? I mean, you're a central banker, you don't want a competing, the whole value of your currency, if you're going to print it and run the printing presses, is that there's no competition.
Right.
What happens if there is?
Right.
Wow, interesting. There's all the talk about putting the U.S. back on the gold standard for years. Why don't they debasing the currency since the 70s? And now there is one. It's called Bitcoin. I mean, it's a fixed supply. That is basically what the gold standard was. It just meant you had a fixed supply.
I mean, I can certainly see internally at the three different regulatory bodies in the U.S. there being a sense of, hey, how is this going to end, right? If the Federal Reserve doesn't have control over the real finances of at least the country, and today I'd argue one of the largest, probably second to culture, export that the U.S. has is the U.S. dollar. If that starts to disintegrate, like it kind of is, as we're printing out gajillions of dollars, it begs the question: what purpose or how does the U.S. maintain control over, at least domestically, its? I
mean, I don't know. Again, if you want to be like a student, I love history. So if you look at the dollar, I remember the Federal Reserve's only existed since the early 1900s. Before that. Most people, banks printed money, and the problem was a dollar wasn't always worth a dollar, right? So you actually had different pieces of, the dollar. Go read your history. So dollar bills in the late 1800s. Then there were bank runs all over the United States. I mean, certain U.S. states defaulted, by the way. If you really go back in your history, so that's why they had to create the Federal Reserve, because it wasn't clear. So if you had a dollar in Virginia, and you brought your dollar from that bank might not have had the specie or gold to back up that dollar. So there was dollars were, imagine there was difference, and that's what you have with these stable coins now. So they all
Did
created
it wait?
equal?
Did the dollar start on the gold backing? So if a bank had a certain amount of gold, they could issue the tender, the paper
Yeah,
money
but
on top of it.
they all didn't do it, and it wasn't regulated. So you had like some, it depended on like know your bank. So it mattered which bank you banked with. If not all banks were created equal, and it wasn't regulated, and there was too many speculative bubbles that happened in the late 1800s. So again, we take for granted that we've had the Federal Reserve, this banking system, but then there was a gold standard, right? And basically up until the 70s when they had this Bretton Woods conference, and that was under Nixon, and they took gold. You couldn't buy gold; it was illegal. They basically you had to. It was pegged at like $50 to the ounce, and that was it. And then they ripped all that up, and then they started printing. But now it's been debased now for 50 years. I mean, now it's done at an exponential level, and that was all fine and well. But now all of a sudden you have this new digital blockchain-based parallel payment system, which is what blockchain is outside of the banking system. It's about blockchain. It's not, and crypto is just the use case. But you have this digital asset that is now well, it's not. It's just the supply is fixed. So that's the whole point of having a gold standard. It's just gold is even if it can grow, it's a limited supply. So you can't by definition run a printing press, right? You'll debase the currency, and that's what Bitcoin is. And then you can see that's why the Bitcoin price is going up. The higher it's going up, well, I would say maybe it's staying constant, and that's the dollar is really just
Yeah, I know.
That's what's
I was
happening.
thinking about this the other day. That we'll flip the conversion charts where it'll be instead of a Bitcoin being worth $60,000, it'll be $1. $1 is the one of many currencies that we compare the Bitcoin to,
And that's the definition. If you look at these countries that have had hyperinflation, like Venezuela, like the Weimar Republic, the classic, Germany between the wars, like when you have so many zeros on interesting. So like you say, if a Bitcoin's now worth $60,000 and it was worth $6, is that just hyperinflation being expressed in a different way? I mean, that's an
inversely
piece of information for the powers that be. But I mean, one has to ask those questions. So I think it's interesting times that we live in that all of a sudden, at the very time they've decided to run the printing press, driven by COVID and other exogenous factors, nothing to do with crypto. It's just interesting that it's a coincidence. And I think that's why crypto has taken off so much in the last 2 years. I think COVID has accelerated this big time because I think the COVID has induced these economic shock, which has caused this money printing, which by definition makes this digital asset all of a sudden very interesting, more interesting than it was, or just the adoption has maybe gone a bit quicker. So I think that's sounds fair.
Do you think I mean, I don't know what your it's funny. I have an assumption about what your answer will be to this question, but I'm curious to see if it actually is. Do you think the Federal Reserve's levers, the powers to control interest rates and currency volume is productive relative to having a fixed currency in the Bitcoin style where we know exactly mathematically how many are going to be in circulation? Is there a practicality, or in practice, is it useful to have a human control over monetary supply, do you think?
Well, no, because the human urge is just to keep printing. So that's the problem.
Right.
That's why we had a gold standard or silver or something to stop that urge. Because in history, and again, you can go back like hundreds of years, and there's been financial crises, and that's why there's always been this sort of fixed supply standard, because you don't want to have these hyperinflation bubbles that end in tears, and that's always what happens.
It kind of reminds me. Yeah, go ahead.
So I think that it's interesting. So the Fed, as it is today, I mean, remember you had 50 years of monetary distortion. I think they're so embedded in the current system that there's what they teach you in business school and the controls that they have. In reality, there is no control. Like they're just stuck with this system. It is what it is. They'll keep the whole thing going as long as they can. I mean, what are they going to do? Tell everyone that they have a bank panic? And what if honestly, it's not fun. I mean, read your history. Look what happened what's going on in Venezuela now. And places like what happened in Germany, between World War I and World War II during the Weimar Republic, when like they had hyperinflation and people were taking like the old banknotes and papering, you needed wheelbarrows to pay for anything. And that's not a very good economic system. And no,
it's terrible.
And it ended in war. We had World War II off the back of that. I mean, that's typically what happens. The population gets pretty unhappy when they're thrown into destitution and all of their money is worthless. That's why we have war. They usually ends in some sort of like military conflict.
If you had to put a likelihood on it, if you say in the next 10 years, are we unlikely, somewhat likely, like very likely to have debilitating inflation to the point where people are
We already have that.
really, I mean,
Inflation is already reported. And remember, they underreport. I mean, we have U.S. numbers like even on like the mainstream media in the U.S., which doesn't, if they're saying it, it's true, and it's like probably worse than they're saying because the media is not unbiased news anymore. I think I think that's a pretty established fact, regardless of one's political things. Like, it's not just data that they give you; it's got bias. But I mean, they're reporting numbers of 6, 7, 8% inflation. I mean, that is the tolerable level is a tiny amount of inflation. So again, when you have massive amounts of debt, it's great for if you're a debtor like the U.S. or all these developed nations because you're inflating away the debt. So great. Let's say so you don't want to own bonds right now because they're going to become worthless, right? It's great if you borrow, like your mortgage, you should borrow as much as you can, fill your boots, like because you'll pay it back and deflate it, and then that's why asset prices, house prices are going through the roof. Used cars, that's a sign of inflation. That's not, all of a sudden hard assets are worth more. Nobody wants cash. Cash is trash. In inflation, it becomes worthless. So I think you're seeing that happening now, and like typically. The problem with inflation and why people hate it, it's once it's out, it's like you can't just get rid of it. I mean, the last time we had this in the U.S., it was in the late 70s, which is why there's so much comparison to this administration and the Carter administration, because it looks very similar just from a macroeconomic standpoint. Forget politics. Like, you had double-digit inflation, and then they had to have Paul Volcker came in to run the Federal Reserve. Interest rates in the United States went up to like 16, 17%. That's the only way that they got inflation under control. You have to raise interest rates. Imagine, with everyone in this country is like borrowed up to the boots, like credit cards, and we take it for granted, going back to your thing with millennials and recency bias, which is a terrible thing, to assume that the way things have been is how they will always be. The last 20 or 30 years have been a complete blip. I mean, look back, and again, late 70s, we have inflation. It's going to keep going through the roof. It's not transitory. It never is, right? And so if you look at history, again, go look at early 1980s, interest rates went to 17%. You could buy U.S. government bonds and have 17% rate.
Why are we not there now? I mean, if the interest rates are so high, say conservatively 6, 8%.
How can you raise interest rates to 17%? The U.S. has God knows how many trillion of debt. Do you know what? But like they can't make the interest payments. So they could do that back then because the debt wasn't so ballooned, right? Now look at the amount of debt. What that would do to all the bonds and the obligations, the country would go bankrupt tomorrow. So that lever, which was used, and that is one of the tools if you look at classic economics, like it's interest rates and employment, again, historically tended to have inverse correlation, etc. But
interest rate to employment rates tend to have inverse relationship. So as you had, the Fed controls the interest rate.
If you raise interest rates, that would drive down employment. But again, I think all of this stuff, it doesn't work anymore. I mean, none of this stuff holds true anymore, right? So again, I think the tool, if you're thinking out loud, like how could they raise rates to 17%? They should raise interest rates right now, even a little bit, just to get inflation under control. They can't because they know that they'll destroy the economy. Like it's so overblown right now, which is why you see crypto now taking off because you've got a fixed supply asset. People just lost confidence in this whole system. They know they can't do anything. It's a prisoner's dilemma that the Fed is in right now.
And I want to understand
ECB, all the central banks, Japan, I mean, they're all in this place.
What happens now if they were to raise even a couple percentage points on interest? That makes it. What happens there if the U.S. can't?
The U.S. has a massive amount of debt. They have to pay interest to all the bondholders. I mean, how do you think the government finances itself? We have like trillions of debt.
The
thing about the Chinese government is sitting on masses of debt. Like, so either you can default on all of our bonds, which means the U.S. government defaults, which is then the dollar's worthless, like everything's worthless. I mean, you don't want to default as a country, like the worst possible thing, right? Your credit rating's gone, and then your ability to borrow, then you become, that's called Argentina. Like, look at what happened in Argentina. This is exactly what they've done for years. You become an emerging market, right? And they have interest rates through the roof. The currency is hyperinflation. Brazil, before they got it under control. So it's a very dangerous game. So I don't know. I'm just sort of stating the obvious to an observer. But I think all this stuff is going on very much. And I think it's very much what's driving so much interest in blockchain. It's just people, they probably have too much trust in some of these platforms, but I think if you can figure out a regulated and clean way, safe way to trade this asset class, that's why you're seeing so much interest in the asset class, because it's not subject to this insanity, right?
Yeah.
You have the normal risk we're all comfortable taking, but like that risk where some guy's going to just run a printing press, like that makes, nobody wants that anymore.
Yeah, yeah, and I think you're right that the fact that it's been, for the last 30 years or so for most millennials' lives. I'm 34, so for most of pretty much my entire life, I know my parents when they first bought a house, they paid. I remember we're actually in the process now of getting a house, and my mom was telling me she paid 14% right now. Interest rates are 2.8 to 3 point something percent, so it's dramatically different. And coming off of the 70s and 80s when they did make they removed the gold backing, it's not that long ago. It's
50 years.
In some ways,
Really
yeah, and no fundamentals of the mechanics of the monetary system or economics have changed at all. And it's something I think most people, I mean, when I talk to friends of mine who are not in payments or fintech, they're kind of loosely familiar with the Federal Reserve, how it works, the relationship between the government, interest rates, and bonds. But it's going to quickly become very, very, very important to just about everyone. And so I think there's this.
So I think there's how the economy works, and classic economics.
How the economy
applies, just because it settles on the blockchain, and I think that then you have the regulatory framework as well, which we talked about at the beginning. But I think, again, just because it's on a blockchain doesn't mean it doesn't. But I think what's happening on the blockchain is it's part of the world, and it's all interlinked. It's becoming much more. The two worlds are merging together. It's going to be interesting. It's not going to be an easy marriage. It's like a clash. It's going to be very interesting to see how it plays out. Which is why I think it's a great industry. Like I dove right in. I mean, this is the future. But it's fun. Buckle up. Put on your seatbelt. Again, I think follow the rules, and you can sleep well at night, and you'll be here.
Yeah.
And it's a long-term game. Some will always go for short-term gains, and that doesn't usually end well. But I think it's still such early days in this, and it's about blockchain. It's not crypto. It's the blockchain revolution. I think it's really amazing. So hopefully,
I agree.
Productivity gains will offset all this, money printing and everything else. Like something.
Yeah. Let me ask you a slight change of topic, but one last topic. So decentralized organizations, a lot of the first part of this conversation, we talked about regulations. It's, I think, impossible to regulate an organization that doesn't exist centralized. Do you have any, one view on it is they're just going to exist. They'll just be decentralized organizations that have protocols in place that define governance and voting and all that kind of thing. Do you have any views on?
Yeah, I think so. Again, I think DeFi is really interesting, and we're a centralized exchange, and most exchanges by definition are centralized. I mean, you can have a DeFi exchange, but I think the problem is, so decentralized is okay. You can decentralize any organization on planet Earth. Like you could have a decentralized Federal Express or UPS or regular boring company. They don't have to be centralized. That could be some new cool management thing that they teach in business school, but. You still would have to pay your taxes, like all the rules still apply. And I think the problem is just because you say you're decentralized, you still can't do money laundering, you still can't do securities fraud. And I think it's harder for those organizations. I think they get a get out of jail free card for all those infractions that even the centralized players, some of them are doing. They think they're really safe. And no, I think that there's this whole concept of reform over substance. Just because you say you're decentralized, a regulator or an authority will say, this blob of stuff, we just see this as a company. So you can see it yourself however you want. The regulator will decide when they come after you what you are.
But isn't it that the regulator? How would they come after somebody? Say somebody's made 3 commitments.
Eventually, they'll get you. I mean, eventually you still touch money somewhere. And I'm just saying that's an interesting hypothesis. Again, that's like criminal law and like how mafia and money laundering and drug orders. I mean, like how do they get them? I mean, it's the same. It's the same sort of theses. So I don't know enough about that, but it usually doesn't end well, and eventually they
I think
like blockchain, there's a record. I mean, you know exactly where you can see the whole history of a token. It's all out there. So I think that's kind of how I would think of it. So again, I think there's a lot of great DeFi projects. I think decentralization as a concept makes a ton of sense. I think COVID has forced us all to be decentralized. But again, I would just caution people to think it's not some magic panacea that, yes, and it's decentralized, so it's totally safe. No, it'll just take the regulator longer. They'll go after the centralized ones that are breaking the rules first, because those they can find. It's just a bit easier. And then they'll eventually, it's just, they always will figure it out. So, I think, again, I can't speak about those things. And again, it's a shame, because then there's really great centralized exchanges or great DeFi projects that are out there that are doing things the right way. And in any new industry, though, you have this. Like, there's good and bad players. Eventually, the cream rises to the top. It just takes some time sometimes.
Yeah, totally. I find the DeFi and the concept there just being so unique, so different than what currently exists, that I don't know how it would quite fit into. Maybe the onus goes on the individuals trading instead of the organization, but it's fascinating.
They'll figure it out. Someone will they'll figure out who they can go after, and they will. So I think, look, there'll be a run, and I think, it's just like any sort of thing. Like, crypto is a bit the Wild West right now, which is kind of how the banking system was in like the late 1800s. Like, you didn't know if your dollar bill was a good one because it was printed by a bank. It wasn't issued by the government. And again, most people don't even know, like you say, past 20 years ago, let alone 100 years ago, and it's not that long ago in human history. So, again, do your history. States in the United States defaulted, like in the late 1800s. I think like Pennsylvania defaulted on some of its bonds, before. So don't assume, now we think the U.S. is this zero risk and we have the seigniorage rights, but we didn't always have that. Don't forget, it was the U.K. before us. Sterling, the dollar eclipsed sterling after World War I. So up until World War I, pound sterling was like the global currency.
Yeah. Do you have any blogs or books or suggestions on people who want to dig deeper? I mean, I'm sure they could open up Wikipedia.
History? I mean, there's so many books, but again, don't look for crypto books. This is like traditional financial history. Right. I mean, I love that stuff, but I mean, just read about the U.S. banking system or like the global financial system in the late 1800s and the early 1900s, and why they set up the Federal Reserve, and that was a way to solve it. But again, there's always the laws of unintended consequences. Like, that might have solved one problem, but it's created, a whole host of others. And I think it's interesting to see that, the problem is you're fighting human nature, which has been around for thousands and thousands. It doesn't change, right? The Romans tried it. Like, it doesn't, that's where history is so interesting, because it does really repeat itself. And so you can look at, I would say if anyone's really worried about inflation, read, and again, it starts out always transitory, it's going away. No, inflation accelerates. Once it's out, you can't get rid of it, and it just gets worse. So, and then it inflates and inflates and inflates. And if we just have 10% inflation now, if like milk went from $1 to $1.10, then it goes up another 10%, then it's $1.20, then it's $2. It's like exponential. And so that's, it's a very dangerous thing once it's out. So again, no one can predict what's going to happen, but we know what's happened in the past. So read about the Weimar Republic, which is what happened in Germany after World War I. It's a famous case study in hyperinflation that you look at it in economics and business school, and you can see how that ended, and it wasn't very pretty.
Yeah, and so physical assets, cars, houses, crypto in particular, probably Bitcoin being the number one, being the places that people can go to avoid inflation.
Well, I think that's what they'll start doing, and they'll just go after. I mean, hard assets go up in value. And at some point there'll be a housing bubble, because remember, houses are all funded by mortgages, and mortgages right now are still very cheap. But if interest rates go up to 17, if they did do that financial repression, which again, read your financial history, the early 80s, Paul Volcker was running the Federal Reserve, famous case study, how did they fix inflation in the US after the Carter experiment? And that was also not all him, that was Vietnam and like everything that Nixon had done. It was compounded, like 15 years of money printing. They did all that Great Society stuff under Lyndon Johnson, and they decided to print money and have these big social welfare programs and have a Vietnam War and have everything else, and it eventually something gives, and then you had massive inflation. And so again, you can look at your history. It's unclear if that's exactly how it will play out now, but it's never very linear or very pretty.
Like you said, the history it rhymes.
It just rhymes. It is what it is. So read it, and you can maybe learn something from it.
Damn. Well, Stephen, congrats on all the progress, and certainly anyone who hasn't checked out Bittrex, do so. Anything that you guys are looking for? I guess you're self-funded or internally you raised one round, hiring people. Anything else?
The company's privately owned. There's 3 original founders. They own the whole company. There's no outside money in the company right now.
It's pretty unusual. Awesome. Yeah, anywhere are you're active on Twitter? Do you want to just mention any online?
I'm not personally active on Twitter. The company, Bittrex Global, has a Twitter account. We're active there. We have LinkedIn. I'm personally active on LinkedIn. But if you want to look up Bittrex Global, it's just bittrexglobal.com. Or you just go to bittrex.com, and then you'll be directed to Bittrex Global if you're outside of the U.S. And if you're in the U.S., you'll be directed to the Bittrex exchange. So I think if you're looking to trade crypto and you want to do it in a clean, regulated, kind of not exciting but safe fashion, then I think we're a great exchange. And we've never been hacked. Our founders come from a security background, so security of the assets plus doing things by the book is, I think, the two things I would want people to think about.
Yeah. I think when I look at banks in downtown areas that have all these big columns, and they're emphasizing the value system of security, like we're safe. No one's going to come us and rob our money. That's pretty.
Roman Empire and have Roman columns.
Yeah,
and that's the whole point of that style of architecture. Absolutely. And look at the Federal Reserve Building in Washington.
Yeah,
it has columns.
And nowadays, people. I use USA. They don't have any locations. Venmo, definitely no locations. They're not advocating like safety of your security first, but I think that in the new
ease of use.
Speeds, good user interface. But we're going to probably go in a circle on that. And hats off to you guys for placing that as a value. Cool, man. Well, thank you again for diving in, and wish you guys the best of luck.
Thanks for having me on your program today. It was a pleasure.
All right, take care, man.
Cheers.